Hi, folks. Welcome to the Weekend Investing Daily Bite. 16th of September, market awaiting Fed's move. We will come to know of it tomorrow. And the market seems to be taking it in its stride that there will be no adverse news. I have shown you in the previous video that interest rate cuts don't really gel with markets going up in the medium to long term. Medium term actually, so short to medium term. Long term, of course, markets will take its own course, but the uh, trigger at which the rates get cut, at that point of time, if the expectation of the rate cut is lower than what it is actually cut, that can have some short term deviation. So if rate cuts are, let's say, expected at 0.25 and they actually cut 0.5%, likely that American markets can fall because suddenly the market could realize that things are not half as good as we thought, and it's a desperate situation. And on the other side, precious metals, emerging markets, they may get a pop up because more funds will now move to them versus the US. So those kind of short term plays can happen, but overall a reducing interest rate does not give a positive impact to the markets, as we have seen in yesterday's video, and I'll put the link there as well. Disclaimer as always, please read fully, understand it, and then move forward in the video. Do subscribe to this channel if you haven't so far. Let's see where the markets are headed. And very nice, clean bar with low of the day being the same as open of the day. And whenever that happens, for the people who are interested in charts, like this candle here, where the open was the same as the low of the day, usually will result in that level being sacrosanct for now. Just look at this. This again opened low from previous day, but open was same as low and the entire day was up. These kind of bars are high probability bars where markets are going to go up. And we've also crossed this very important pivot of 25 150 or so. So 0.68% on the Nifty, very nice rise, I would say, and looking all right. Nifty Junior 0.58. We are almost near June July highs and looking good. Mid caps up 0.62%, small caps up 0.74%, and banking stocks also up 0.47. So banks have been slower than other sectors, but all moving up very nicely. Gold moving another 0.48%. In dollar terms, gold is very near 3,700, 3,699 as I am speaking, and 11,096 is the gold price per gram, and this is the the official converted price from dollars, including import duty, etc. But there is a 4,000 rupee per 10 gram premium to this. So actually, when you go buy in the markets, it's actually 11,500 or so, which which is quite high, given that we were at 9,800 just less than a month back. So this rally in gold and premiums being there in the market are very suggestive of some structural breakdown in global gold movement. It means that the deliveries are very short in the market, and while it may be premature for me to say this, but this can snowball into a massive sort of a situation where the demand outstrips the supply and gold goes up dramatically very very soon. That is also possible. Advance decline ratio very very steady. In fact, advances in the morning were more, and they continued to slip a bit. But nevertheless, by the end of the day, it was a nice figure of 326 to 174. Reasonably green Nifty screen. So Bharti Airtel, L&T, Mahindra, Maruti, Kotak Bank, Axis Bank, all doing well. TCS, Wipro, HCL Tech. Infosys is spending 18,000, but the shareholders are not rewarding it at all. I don't know how much the market cap has gone up, maybe like 3-4% since the day of the announcement. But throwing 18,000 crore at a sagging stock price and not getting any major fillip, I think that's a waste of money that they did. In Nifty next 50 space, you have Swiggy move up, Hyundai move up, JSW Energy, Motherson, Vedanta, Bajaj HFL, Bajaj Holding, Chola Finance moving up very nicely, Tata Power moving up very nicely, and some losers in BBL, Adani Power, Godrej CP, Dabur, Naukri, etc. In the movers of the day, you have Reddington moving up 20% in a single shot. Uh, Not sure what was the outcome of any news on this, but certainly the momentum followers could not catch it. This news must have been some sudden news that has come in. I'll look at that. But suddenly now, Reddington moving up 20% has caught everybody unaware on the wrong foot on this stock. Sectoral trends, Nifty Auto took up lead. So if you are watching this daily bite on a daily basis, you will see how nicely different sectors keep rotating. So just a few days back, autos were leading, and then autos went back into a sort of a background, and you had PSU banks and capital market and real estate do well, and now suddenly autos are back again. Real estate also doing well. So there is hope that US will cut, and hence India will cut later on, and hence real estate EMIs and home loans will get better. That's the expectation on the real estate and the auto front. That's why these stocks are moving rapidly today. Infrastructure also up 1%. Manufacturing stocks 1%. CPSE, energy, PSEs, IT all doing 0.8% or more, along with metals, oil and gas, and commodities. So a very widely spread gain day to day. Like I was mentioning a couple of days back, it seems like market is not wanting to go down, and there is a positivity in the stride of the market. Capital markets sulking today. Again, there is the weekly expiry thing. There were some commentators today who were showing how badly the volumes are continuously getting impacted. Even Nitin Kamath of Zerodha has come out with a bad prognosis for the broking industry given this development. And FMCG stocks also did not do well at minus 2.27%. Autos, you can see after a lull of 4 days, are coming back and going up again. Balakrishna Industries, MRF, Maruti, Samvardhana Motherson, and Mahindra leading that rally. In the tweets of the day segment, so this exchange of messages I had with a top jeweler in NCR, and he's also a great gold expert, and I exchange my views with him sometimes. And he messaged me this morning about what is my view on gold, and I told him that if a, a Fed announcement which is expected comes through, perhaps there will be a sell on news in the very short term on gold prices, since gold has run up to this event. But if the Fed cut is like 0.5%, and the narrative that comes out after the Fed cut is also looking very desperate, then probably gold can go into the next trajectory towards 3750, 3800. But as I mentioned, nobody can really make this call in the short term. Long term, I think we are not probably realizing it, but we are living through history getting made, where gold is strongly coming back into the monetary system. There is immense amount of demand for it now, and this is not going to roll over and die tomorrow. Please understand that when such kind of changes happen, this will go on for years together. And when we will, maybe 5 10 years later, when we will look back at this period and say, oh, the gold moved very rapidly in those 2 years. These are those kind of decadal moves that are there, and I will not be surprised if we go much higher from here. Of course, I have no way of predicting anything, and I'm biased because I hold it. But I mean, if gold were to go to, let's say, 5,000, 10,000, it's not such a big deal, because the entire system is changing, and the US is trying its best that it doesn't change. So, can the US disrupt it through some whatever stablecoin drama that they've recently started to do? I don't know. But if the way things are going, we are at the base level of this rise. And I don't want anybody to take this as advice and go out and buy, but do your research and take a appropriate decision. The important thing that he told me, the top jeweler that I was talking to, is that there is physical shortage in the market. And I asked him and two others also. So they were telling me the approximately 4,000 to 4,200 per 10 grams is the premium that is being quoted in the market. So if you want to go buy physical gold, you'll have to pay the official price plus 4,200 per 10 grams. And that after a run up like the way we've had so far, it clearly means that this is not a normal run up. Is something, you know, seismic shift is happening in this market somehow. Some very big players, maybe central banks, are just, taking delivery of whatever is available, and hence, for mere mortals, the deliveries are short. So a lot of interesting things are happening here. Um, Another interesting news was the CBI has filed a charge sheet against brokers in NSE colocation scam. Now, I think, and I could be completely wrong on this. This comes at a time when NSE was almost about to, settle it with SEBI. They had, I think, offered some 13, 1400 crore rupees to settle the case. And the past few days, the media was suggesting that it will be done and dusted within the next month or two, and IPO will come in 8 or 9 months. This new charge sheet opens up a Pandora's box now. Now, what happens to the IPO? Is NSE named in this, or is it only brokers that are going to face this heat? So it's very, very surprising. Maybe there is a conspiracy theory that is happening here, that people who don't want NSE IPO to come, there would be players like that, right? I mean, you can understand who it would be. Are they sort of trying to make this happen? This is very, very surprising news. So I wanted to share this here, and perhaps if you have your view, do write it in the comments, and it will be interesting to read that. Today at 8 p.m., we are going to do a very nice data dive into Japan's 35-year breakout. Japanese market is breaking out of a 35-year drawdown. What India and investors must learn from that data is something that we'll talk about at 8 p.m. So see you then. And if you like this video, do like and share this video, and do subscribe to our channel. Thanks. Bye.